Welcome to Trading Nation. I'm Mike Santoli. Snap shares plunging to a fresh all-time low on Wednesday. The social media stock, now down more than 50% in 2018, has lost nearly $20 billion in market value since going public early last year. This as it grapples with increasing competition and Wall Street concerns about the company having enough cash. So are Snap shareholders about to disappear in even larger numbers? Matt Maley is with Miller Tabak. Mark Tepper is with Strategic Wealth Partners. Mark, you know, it's interesting because the skeptical case about Snap was front and center from the day it went public. People wondered if this was just kind of a feature in search of a business. The valuation seemed pretty excessive. But now, at these levels, is there anything to like about the stock?
No, nothing. So, I mean, they have an awesome product, but this is really just a great reminder that not all great products make great companies or stocks. In general, I really believe that all of these social media companies are really through that hype phase where the stock prices grow in tandem with user growth. And it's pretty apparent that user growth is slowing, and now these companies actually have to perform and they have to produce results. The problem is they're running out of good ideas. And from a revenue perspective, they're basically all just ad companies. And from my personal experience in running ads for my business on all these different platforms, nobody can compete with Google. So they're all second and third tier. Now on Snapchat specifically, here's the deal. They are the most preferred social networking medium amongst teenagers. Remember, they make all of their money from advertising. What kind of buying power do teenagers have? Not a lot. And they're really struggling to attract people over age 34, and those are the people with buying power. So it's tough to bring in big advertising dollars when you don't have the right demographic. So we would not be buyers of Snap.
Just quickly, Mark, though, at an $8.5 billion market cap right now, isn't there some company out there that says, I need to have the eyeballs of those teenagers?
Possibly, but I mean, look at Facebook with Instagram. Aren't they already doing that? And I think they're doing a significantly better job than Snapchat at that point. Yeah. So is there potentially an acquisition opportunity? Sure, you know, but we're certainly not going to bet on that.
Matt, obviously an extremely ugly chart. Any way you can make the case that it's washed out?
Well, you know, you can to a certain degree because, you know, the stock is the most oversold it's been since June. And back in June, the stock bounced 40%. That's a great, obviously a great rally. But you look at that RSI chart, it's down below 11. I mean, when it gets that low, you start to worry about, you know, the issues that you mentioned about whether it's cash levels, you know, are going to let the company survive. So, you know, the problem, you know, you have is when, you know, you said Sears Company, boy, that got really oversold, and it saw a decent little bit of a bounce over the summer as well. But now they're, you know, on the brink of declaring bankruptcy. So it's just a very dicey stock, and looking at the chart is really not the way you can look at it right now. I mean, if you do want to play it as a lottery ticket, you can do it that way. The problem is with lottery tickets, they can pay you a lot of money if you hit them, but more time often than not, you lose 100% of your money, and you have to be very careful. So on a technical basis, it's almost unmarketable, and you really have to look on a fundamental basis and see how much cash they have on hand and if they can really survive.
As a general principle, Matt, if you see a stock that's this oversold and looks like maybe it's sending a pretty scary signal, what would you want to see? I mean, is it good to have it flatten out for a little while, have it seem to at least stabilize?
Well, it's funny. At the very least, you need to have it stabilized, but you need some fundamental backdrop to it. But as you mentioned, when something gets this oversold, it kind of reminds me when somebody's. It reminds me way back in the early '90s when IBM's dividend yield got to 12%, and it just said, well, it got so high that you knew they were going to have to cut it, and that's what they did. In this case, the stock is so oversold, we know they got some bigger problems going on. So I just tend to avoid the stock until you get some real fundamental news on the positive side.
All right. I guess hard to make the upbeat case on Snap. Mark and Matt, thank you for joining us today. And thank you for watching Trading Nation. I'm Mike Santoli, and we'll see you next time.